One of the best ways to make sure that you're getting the best terms for your mortgage is to compare mortgage proposals from multiple lenders. So it's important to understand that you have lender options when you shop for your mortgage. There are four main types of lenders: banks, mortgage bankers, credit unions, and mortgage brokers. I'm going to explain and discuss the pros and cons for each type of lender. I'll start with banks. Banks accept deposits from customers and then lend that money to other people in the form of mortgages and other loans. As it relates to mortgages, it's important to understand that banks fund mortgages, which means they actually provide you with the money for your mortgage. So that is one of the pros of a bank. They are a direct lender, which means they may be able to offer you a low interest rate. The con with the bank is that sometimes their borrower guidelines may be stricter than other lenders, so it may be more difficult to qualify for a mortgage. Examples of banks include Wells Fargo, Bank of America, and Chase. You may also have local banks in your city. Next, I will discuss mortgage bankers, which are pretty similar to banks, except they typically do not take deposits from consumers and instead have other sources for the money they use to lend people for mortgages. Like banks, mortgage bankers are direct lenders, so they actually provide you the money for your mortgage, which is one of the pros of a mortgage banker. Another pro is that all they do is provide mortgages, which is different than a bank, which has many products. The cons of a mortgage banker are that they may have limited resources and they may not offer better terms than a bank. An example of a mortgage banker is Quicken Loans. Next, I'm going to review credit unions. Like banks, credit unions take deposits from consumers and use that money to offer people mortgages and other products. Unlike banks, credit unions are usually not for profit, and you typically need to be a member of the credit union to obtain a mortgage from one. In order to be a member, some credit unions may require employment or affiliation with a specific organization, such as active military. The pro of a credit union is that they can potentially offer better terms, such as a lower interest rate or fees, because they are not for profit. The con of a credit union is that you may need to meet certain eligibility requirements to join. An example of one credit union is Navy Federal Credit Union. Our last lender is the mortgage broker. Mortgage brokers are different than the other three lenders because they do not fund mortgages directly. Instead, mortgage brokers work with multiple funding lenders to offer borrowers the best mortgage product. Basically, you can think of a mortgage broker as your personal mortgage shopper. They work with other lenders to find you the mortgage with the best terms, and they process the mortgage for you. So the main pro of a mortgage broker is that they do the work of comparing mortgage offers from multiple competing lenders, which may allow you to find a better mortgage. The con of a mortgage broker is that they do not fund your mortgage directly. They work with other lenders, and in some cases those lenders may not offer the best mortgage terms. Mortgage brokers are typically smaller, local companies. So now that you understand that you have lender options, how do you put this knowledge to work when you get a mortgage? First, we highly recommend that you collect mortgage proposals from several lenders before you select your mortgage. Second, speak with multiple types of lenders. So talk to a couple banks, a mortgage broker, and a mortgage banker and compare the proposals you receive. This will take a little extra work on your part, but it can save you tens of thousands of dollars in the long run. Finally, it's not always easy to qualify for a mortgage, so it's good to keep in mind that you have options. For example, if a bank says you cannot qualify for a mortgage, speak to a mortgage broker or a credit union, as they may have different mortgage qualification rules or mortgage programs that are better suited for you. In short, understanding your lender options will help you find the mortgage that is right for you. To find lenders in your area, simply click on the green Compare Lenders button on the top of any page on freeandclear.com, and that will take you to a page that lists lenders in your city. We encourage you to review related freeandclear.com videos, such as which mortgage program is right for me and what size mortgage can I afford, as well as the mortgage process guide on freeandclear.com. Thank you for reviewing Understanding Your Mortgage Lender Options with Free and Clear. Freeandclear.com